This is a pretty interesting article on the demand from silver Chinese investors are placing upon silver. It's from infiniteunknown.net. I'm going to post this link. I don't know how accurate everything in here is, but I'll just state what it says. It says from a year-on-year basis in 2010, there has been a 751% increase in volume on the Shanghai Gold Exchange for the silver metal. Now, it says, meanwhile, in the volume in September of 2011, this year, was more than 6 times that of the same period in 2010. And we all know why, because silver took a very large drop in price of 25%. But that also means that that price must be too low if there's 6 times as many people coming in and buying it in September of 2011. It says Chinese commercial banks are now selling silver to investors in hundreds of tons. One example is the Industrial and Commercial Bank of China Limited, ICBC. So they launched paper trading. So I guess the Chinese do paper trading too, right? I think they are really big-time buyers of physical, but I guess they have paper trading, and the paper trading, they say, is redeemable in physical. It says the trading volume of the ICBC, China's bank, paper silver products alone reached 300 tons in the first half of 2011, which is 4 times what it was in the whole year of 2010. So basically, it's 8 times what it was for the same 6-month period, 2011 to 2010. Now, you're talking in paper silver products, you're traded on this one bank 300 tons, and there's 22,500 tons worldwide production, according to some figures I got. This is a key factor to pay attention to, is that most of these silver purchases are forward contracts, not the actual physical silver. What happens when Chinese investors demand physical silver instead of paper silver? What do you think they're going to do, right? The global silver market will trade 1 billion ounces daily in global markets, which is more than the entire amount of silver mined in a year, which is close to 700 million ounces. Well, actually, it's not even close to 800 million ounces, according to the figures I got. It's between 713 million ounces or 736 million ounces, depending on what figures you use. So that means it's 1 1/3 times is traded in the global silver market on certain days, more than the entire yearly production of silver. And I know this was harped on. This point was brought out before. If anybody watches Brother John F's channel, which he's very good at pointing out a number of facts about silver, but it's in here again. But I think is going to happen. I think the Chinese alone, not even counting the India and counting other countries, Chinese alone are going to bring about enough demand in silver to drive it right through the sky. I mean, it's going to go way the hell up. I know it's been said a million times, but somehow I think reality is going to catch up with everything, and this spot price does reflect, you know, it's all tied in with the mining. It does reflect reality. If you know, it's the spot price is going to go up, the paper market's going to go up too. I know the paper markets are taken from the physical, but they're all going to go up. This is from the Silver Institute, and they're talking about China's production is, well, let me first get on to this other figure where there's some discrepancies. There's 736 million ounces in 2010 on silver production worldwide. On the Silver Institute. On this other article I was looking at, you're talking there's 713 million ounces. And we just saw that other article, the first one, they said there was 900 million ounces. But figure it's about 713, between that and 736 million ounces of silver produced in a year. Yet, paper contracts on one day could be 1 billion ounces. So it's even more skewed than people think. In this article, they're saying Peru is the #1 producer of silver in the world, and Mexico's #2, China's #3. In this other article, and I just put the same information on Excel, they have Mexico as #1 instead of Peru, and then Peru #2 and China #3. But still, China is a very big producer of silver, and they are limiting their net exports of silver to foreign investors. They're keeping most of it. They have a quota limit. They're keeping most of it within their own country. Now, at $35 an ounce, figure, I don't know, whatever it's going to be tomorrow or whatever. Maybe it'll be $80, right? Anyway, $3.5 billion. That's what it represents for all their production, which includes industrial, and only a small portion of this amount that these numbers represent is actually available for investing or for coins or ETFs or whatever. So you have in the world, you have all the global production. You have 25.3 billion dollars of silver production, of which only a small portion is actually available for investing. You figure it's not even $5 billion that's available for investing. So assume China wanted to just take $5 billion and invest in silver. What the heck would happen to the silver market? Now, I want to point out one other thing. China's debt, they hold the U.S. treasuries. They're about, this is marked in billions, so this 1,000 is a trillion. I put this black line here so you can see this blue area. This is China mainland, and this is a recent chart. This goes up to the end of 2010. They're about $1 trillion. They hold about $1 trillion of U.S. treasuries and bonds or whatever. So, you figure what they have, if they were to invest some of their savings in silver, what was available in the world, the entire amount that's available for investing is probably only about $5 billion. You're talking like a tiny fraction of 1% of what they're holding in U.S. treasuries. And I'll guarantee you they are very nervous and scared about holding these U.S. treasuries, but where are they going to move to? Maybe there's going to be a world Euro-wide bond that'll come out, but I mean, really, when you start thinking about it, these metals are the safest area, and I think that's where China is going to just China alone is enough to bring up the price of these metals a great deal. And that's without even trashing the currencies or anything. Even if the dollar still has a lot of buying power, I think this silver is going to go way the hell up. This article I thought was very interesting because, and I know this was pointed out before, about silver production is actually silver is not produced by itself. It says of the 9 major countries that produce silver, it's only Bolivia, I believe it's down here, of 9 countries. The only leading silver mine that produces exclusively silver is from Bolivia. So everything else, all these other countries, they produce silver as a byproduct of a base metal, and usually that base metal is copper. Now we know what happened to copper recently. The price has been dropped quite a bit because of fears of the global market, although it's recovering, and I think it actually I hold some copper too. I'm not primarily into silver. I hold a lot of different things, I'm primarily into physical silver, but I spread my bets out everywhere. But copper production, copper prices have been suppressed recently because of fears of the markets, what happened in the the European markets recently, but it's recovered a lot. But still it's down from its highs from the year. So primarily when silver is mined, it's usually mined as a byproduct of copper essentially, and sometimes zinc, sometimes gold, but usually copper. And what that means is that for the mines to be profitable, they have to make up for the price on silver. So since maybe they're getting a lot more copper, I know copper's a lot less money per ounce. They measure it by the ton and stuff. They price it by the ton or the pound or the kilo. But you're getting many more volume of copper out of the mine than you are silver. So actually, you could probably be getting more dollars worth or more profit out of it than out of copper than you would silver in the mine. So if the price of copper is down, what happens is you have to make up for it on the price of silver. It's just like when oil dropped to $40 a barrel in late 2008 and into early 2009. What happened? Everybody stopped drilling for oil, and then since it doesn't, you just can't start that back up again. Once they stop, it's the same thing that could happen with mining, because copper prices are suppressed right now, somewhat, and that could drive the price of silver up. And not immediately, but it'll have an effect on it. One other thing I pointed out before is that mining is extremely energy intensive. It's about, figures I saw from this one pro forma of mines that we were going to do in the United States. It was 40 to 50% of the operating cost, not including depreciation on capital expenditures and all that stuff, but just your regular daily operating cost. 40 to 50% is diesel fuel, and that's not even including electric or utilities or other things. Diesel fuel only. So if oil prices or crude oil prices go up a great deal, and say they go up 50%, that's going to cut in dramatically to the mining profits of silver, or any other metals for that matter. So what's going to happen is that the price is going to have to go way the heck up for the mines to be profitable. All that stuff means, there's not going to be that much physical silver on hand if energy prices go up and base metals such as copper are depressed right now. So when a country like China, which holds $1 trillion in U.S. debt, wants to maybe invest more in silver and encouraging its citizens to do so, you can bet the price is going to skyrocket. Now, also, the oil-producing countries, they're forced to, like Saudi, invest back in our money. They they invest in U.S. treasuries with the oil proceeds money, revenue they receive from the oil. Well, they're in on this stuff that they know the U.S. is going to default. These people are not stupid. The Chinese are not stupid. They're looking for safe havens. And it's not just China, it's not just India. I'll guarantee it's Saudi Arabia and other big oil producing countries that are investing in silver and gold and creating a big shortage of physical supply. So what I expect is, I think this price is going to explode at one point in time. I don't have a crystal ball, but I don't think it's very far off in the future at all. Because I don't think the price of silver exploding is going to kill the economy or anything. But I think it's probably, I know they don't like that because it makes their fiat currencies look a lot worse, and all that kind of stuff. But what I think would actually affect the economy, where you're going to see prices rising across the board in many areas, is going to be a price of energy, which is crude oil is going to do that. And I think that stuff is going to get very expensive. But, I don't, crude oil is something I guess a country could buy. But with Chinese, they're trying to encourage their citizens on an individual basis to buy something. They're not going to tell them to buy crude oil. And since you got 1.3 billion people there, I know the whole could afford silver, and probably by 90% of them probably couldn't even afford 1 ounce, for all I know. But there's still a lot of buying pressure on an individual basis in China. Not only is it going to be the country itself, and anybody that has any kind of money throughout the world knows what's going on with the debt situation throughout Europe, the United States, and all across the whole world. And this buying pressure is going to come from a lot of different angles, not just China and India. But do expect the oil-producing countries, I'll guarantee you, they're buying up silver and gold like crazy in physical quantities. So what's going to happen? I tell you, I wish I did have a crystal ball, but I do think this price is going to explode like crazy pretty soon.